Hey guys, Philip Shadler here, a local real estate agent in Los Angeles. And what is going on in the real estate market? Stay tuned for the latest data and facts in the real estate market. Let's look at the October 2022 real estate market. What is going on? People are talking about the crash still. Crash hasn't happened yet. It could be, but I don't really see it. But who knows for sure. Let's look at some data, especially Altos research. One of the things that's interesting is that we have a 20% higher inventory than last year at this time, which is good for buyers. 42% fewer homes on the market than at this time in 2019. So we do have still low inventory. This is still something that we're being plagued with. I think we have at the moment close to, let me just have a look real quick. We have 865,000 units, meaning homes, houses, not condominiums or townhouses, for sale out of approximately 83 million in the United States. So that's still very, very low inventory. Now, it is less of a seller's panic, more so of a decline on the buyer side due to high rates. So there were sellers, but they have pulled back because they looked at the situation and thought, I have a cheap mortgage because they refinanced most likely during COVID, and they have a lot of equity in the house. And they here and there are pockets where there's price reductions. Now, it's not all across the United States, but there are price reductions going on in certain pockets, like Phoenix, Boise, Idaho, Coeur d'Alene, Idaho, Spokane, Washington, Lake Havasu, Arizona, also Connecticut. So some parts in the east, but there are certain pockets where people fled to during the pandemic. So they do definitely see price reductions, but there are here in Los Angeles, for example, there are some, but not as many as you would expect. And most of the reason is a low inventory. According to Altos Research, who monitors every single house sold in U.S. inventory, states that by the end of 2022, the inventory could be as low as 475,000. That would be very low. And if rates climb further, then we would see more of a slowdown in the market and more pressure to lower prices for sellers in 2023. However, now Fannie Mae predicts that mortgage rates will fall to 4.5% in 2023. That is an estimate from Fannie Mae, and that, of course, would be great for buyers. Now, what this means for buyers, if somebody can or is in a position to buy now, even with the high interest rates, you have, as a buyer, you would have less competition, more of a choice of properties to choose from to purchase. And if the rates, this is a great if the rates do go down, you could refinance in 6 months. After 6 months, you close escrow, you can refinance. Now, again, this is a gamble. Oftentimes, real estate can be a gamble, but this would be advantageous for buyers right now because they have more choices. Now, again, a lot of buyers are holding back and standing back, waiting to see what's happening with the market. Some of the sellers have pulled away from selling because they didn't see the crash that they expected hasn't come yet. And like I mentioned earlier, they have a lot of equity in the house and they have a cheap mortgage. Another problem for sellers would be if they were to purchase a new home, they would sell now and purchase a new home, they would find themselves buying the same size house for 30-40% more. So it doesn't make sense for sellers to sell right now unless they're going to leave the country, as some people do, or even leave the state. Another reason is also a lot of people may be holding back because midterm elections are ahead and they're kind of wanting to see where the what direction the country is going. That may also be a reason why some people are holding back right now. Total inventory right now is, like I said, 556 and 865,000 units. This is a little bit up from the months before, from July and August. Not much though. The median home price at the moment is 439,000 in the U.S. That's the median home price. Again, for Los Angeles area, it's very different. This is just across the country. New listings unsold have climbed a little bit. As you can see here, each color, this is from Altos Research, each color represents a year. And if you look at 2022 here, there has been a slight climb, not much, but a little bit. And we don't know exactly if this is going to continue or if this is going to drop towards the end of the year. Traditionally, it would drop, as you can see in the previous years, towards the end of the year, December. It would usually drop. So this is something we can assume now. If that's the case, then again, we have less inventory. And that could be the reason why prices are holding as where they are. As you can see here, this is the weekly inventory change, U.S. single-family homes, and right over here, this was a forecast. This has been the spike in inventory, but then here in this month, here you can see the 2022 forecast, there's a slight spike here, and then it seems to drop. So this is another indication that inventory might drop by the end of the year. But let's listen into this interesting situation here, because according to this study from UBS, a majority of people believe that they can easily get a home. This is a pretty amazing report. And if this is true, then one has to wonder, is it possible? Could it happen? It possibly could, because think about COVID. During COVID, where did the money come from for all these people buying homes? You would think it'd be quite the opposite. The market would crash. Instead, it took off like a rocket. So let's listen in to see what these guys have to say.
Don, welcome. Good to have you with us. I mean, I have to say that some of the numbers in here seem outlandish to me, to be honest with you. 44% of respondents plan to buy a residential property over the next 12 months, the highest reading since the survey began in 2014. That's 2 out of 5 people. Who are you surveying exactly?
It's a good question, Tyler. Thanks for having me. It's a wide-based survey. In fact, this housing intentions survey is from our evidence lab here at UBS, and it's been going on for years. It's one of the longest-standing housing surveys on the street. So it's a wide range of folks that were surveying across demographics, across ages, and so it's a pretty unbiased account here.
How big is the survey? How many people are surveyed?
Over 2,000.
Over 2,000, and it is not high income skewed, it is just the general population.
Correct. And there's some other interesting things that came out of this. I mean, you mentioned the 44% of respondents that would buy a residential house, and that was a record. 70% strongly agree that owning a home is a great investment. 80% didn't view affordability as a major problem. And 90%, believe it or not, believe the value of their home would be higher in 6 months. Now, that's really important, particularly given what's being contemplated in the stocks right now.
Wait a minute here. My note says 78% of respondents versus 66% in June believed that finding an affordable home would be, quote, somewhat to very easy. But wait a minute. Interest rates have gone to 7%. Prices may have come down a little bit, like 1% in the past 2 months. But that's not, I just don't believe that. I just don't believe that people think affordability is no sweat, is a layup.
You know, Tyler, it was surprising to us as well. And the numbers are the numbers. But let me put a little perspective around it. One, I think that if we look at what happened in August with new home sales, interest rates came down a little bit. It showed that there was a lot of demand elasticity. We had a print of 685 that was up 29%. Sequentially. Now, also keep in mind, and we've been talking about this for a while, there are a lot of levers that first-time home buyer can pull. You know, living a little further away from the city, there's a huge generational wealth transfer, in-migration, and so forth, not to mention student debt relief. So we believe that first-time buyer that's driving things here today in the market is still reasonably well set up, and if they can buy, they will buy, even if that means buying less.
I'm curious, looking at the data that you ran, John, and the survey, what does it tell people who are watching right now how to invest in home builders, the sector you cover?
Yeah, it's a fair point. Look, I mean, prices were down sequentially, and I would say actually marginally. It was historically a bigger move than normal, but if you look year over year, they were still up substantially. How do you invest in the group right now? I think you have to be very careful, right? I mean, interest rates are moving 20 basis points a day in either direction. So I can't sit here and tell you in good faith that I'm out there pounding the table saying now is the time to buy. What I am saying is that I think it's a time to do the work on the stocks and get ready, because we are heading into what is seasonally a very, very strong period for the stocks. And if interest rates can just settle, we could have what's called a hope trade, November through January trade, that could be on steroids.
Well, this is a very interesting point of view that these guys have. This from UBS study, very unexpected, I have to say. And again, it kind of goes in line with what Fannie Mae. Fannie Mae predicts that the mortgage rates would drop to 4.5% in 2023. So it's going to be very interesting to see what's going to happen by the end of the year and in the beginning of the year. The idea of the Feds was to slow down the market, and they have definitely done that with the steadily increasing mortgage rate. Buyers who are buying now, this was mentioned earlier, would face less competition, and that may be a smart way to go because more choices and less competition. And if rates really drop in 2023, then refinancing would be a possibility. If a recession rolls in, which nobody really knows for sure, but if a recession would roll in 2023, there could be some job losses possibly, and that could also carry or cause some foreclosures to happen. Although I don't really think that is really a high probability, but we don't really know exactly. Even if there's a recession, again, remember, people have a lot of equity in their homes and have a cheap mortgage. So if they refinanced during COVID, so there is a chance they might be able to ride out the recession storm. Maybe, maybe not. But if we see something like that, then we could probably see an increase in foreclosures. If California becomes too expensive for you and you're thinking about moving, please let me know. I have special teams in Florida, in Charlotte, North Carolina. I just closed a transaction there. A couple of clients moved there. I had some people move to Boise, Idaho. I know Stephanie up there, also a great realtor. And then also down in South, I have Shannon, and up north in California, if you want to stay in California, you want to relocate from Los Angeles to another city. But if California is the place that's too expensive for you and you want to move away, please let me know. I can connect you with a great real estate agent. Thank you so much for watching. If you have any questions or want to leave any comments, please do so in the comment section. And if you can like and subscribe and distribute this would be greatly appreciated, as it will help me very much. Thank you so much and have a great rest of the day.